Ladies and gentlemen, welcome back. We heard earlier about the geopolitical drivers that are reshaping world trade. We're going to focus on what some believe really is the big game changer here, and that's technology. Artificial intelligence, robotics, blockchain, 3D printing, big data. These are already having an impact on trade, but also on business and society more broadly. Technology is, of course, at the core of the dispute between the US and China, so it's also playing out on the geopolitical stage as well. In the Future of Trade, which is an extensive piece of research conducted last year by DMCC, the consensus among business leaders was that technology will have a profound impact on their business and on trade over the next decade, more so than trade wars or geopolitical shifts. So they're the sorts of issues we're going to discuss here. Technology, its impact on trade, and its impact on business. And to do so, I'm joined by Luan Tian, Director of Global Incubation at Innoway, Sunil Veetil, who's the Regional Head of Trade and Receivables, MENAT at HSBC, Andrew Sims, Chief Executive Officer of NEC Payments, and also Executive Board Director of the Bahrain FinTech Bay, and Anthony Butler, Chief Technology Officer, Blockchain at IBM Middle East and Africa. Luan Tian, I want to start with you, because AI is one of your specialties. We were speaking to Dr. Kai-Fu Lee last year. We've done a bit with him at Asia House. He's one of the leading thought leaders, one of the leading thinkers on artificial intelligence. And he spoke with great vision about how it's going to transform business and society and the like. I'd like to ask you where China sits in the AI race against, say, the US and this region in the Middle East. Kai-Fu Lee's view is that China will become the #1 AI country in the world. But what's your take?
Well, Kai-Fu Lee is also a good friend of mine. So people say that he's like kind of father of AI. Back to the age, the artificial intelligence being actually went through third wave now, and back to like the 1970s. But now the people again talk about artificial intelligence, mostly of course machine learning, is also because, for instance, China is it's through the PC version, and then later on the mobile internet, and then of course it become like a big data driven, and then artificial intelligence is kind of like a solution or actually up level of big data. So it's like based on position.
It's based on big data, right?
Yeah. Yes. So that's why people even mention about, of course, US is also really good on it. China artificial intelligence mostly because there's so much enough data to feed in the machine every single day, to train the machine learning process. That's how it goes, right? So you cannot really skip the periods and then just mention about artificial intelligence the process. And then of course one more thing. Mobile internet is really based on the 3G, right? So the 3G is kind of like foundation of mobile internet, and China is really good on it because the populations, etc., and middle class, rising up, and 4G, of course, video stream, 5G, which is coming soon. So it's going to be the foundation of automatic driving, and plus VR. So yeah, our life is actually step by step changing.
Yeah, and 5G being a big part of that to enable some of these applications.
It is foundation of, for instance, self-driving. So it's really based on like 5G and plus VR. So future on, I cannot really imagine how many years, but eventually that we don't need to sitting here. Everyone at your home has VR glass, and potentially we're sitting. Maybe I'm actually cooking at home, but actually pretending, sitting here, talk to you. Yeah.
Well, I'm glad you're here, just for the record, glad you're here. So let me talk to you. What trends are you seeing in business, especially across this region? Because we're going to talk about blockchain shortly, but that's just one piece of the overall FinTech puzzle. So what trends are you observing at the moment?
So one of the key trends we are seeing globally as well as in the region is the growth in trade and services. Now that explains why you see a number of investment or growth in technology that comes about. For example, just to give you some perspective, in 2017, the services trade was around $5.2 trillion, whilst the trade in goods is around $17 trillion. Now that's it's almost 1/3 the size of the goods. But then if you see the growth rate, Over the last decade, services grew by almost 60% faster than the growth in goods. But if you kind of look deep into the service sector itself, the technology telecom sector grew by almost 250% more than the growth in goods. So you see a big shift in growth in services, and it's very undervalued part of the trade global value chain, to be honest, because a lot of people don't understand how the IP has become a part of the trade. If you look at pharmaceutical as an industry, today 80% of the pharmaceutical global value chain is actually IP. Because they do now a lot of contract manufacturing in the country, so all they do is give the IP and then they manufacture in whichever country you want to do. Similarly with technology or telecoms. So that is a big trend we are seeing, where there's a shift from goods trade to services trade.
Interesting. Anthony, we were here last year and you talked about some pilots that IBM was doing with Maersk using blockchain for trade. Well, we're a year on now. It's been rolled out to a degree, I understand. Where's that stand now?
So when we spoke about it last year, it was very much nascent. Where we are today, we have about 60 active participants in that network, ports, logistics companies and shipping lines. There's about 1.5 million shipping events that are going through that network every day. So it is very much live, and it is delivering real value to customs authorities, to logistics providers, to ports. So it is very much a live and successful network, and one that's growing exponentially.
And what about cost saving? What are the benefits? What are you seeing?
So we're seeing benefits come in two forms. So the first form or the most direct and most immediate form of benefit is through the digitization of paper. So as I'm sure everyone in the room will be familiar, in any export-import process, there is a lot of physical paper that's involved. I think last year we spoke about a study that we did looking at the export of mangoes from Kenya into the European Union, and there were 200 exchanges of paper that happened as part of that. So digitizing that paper is able to remove a lot of cost, a lot of friction, and a lot of delays out of the process. So that's kind of the most immediate benefit that we're seeing. The second benefit, which is more of an indirect benefit, and this is around the data. So now what is happening is those participants in that network have an unprecedented amount of visibility into the supply chain for that container. So they're able to look all the way back to the factory and know exactly where it was packed and every step of the journey along the way. So to give you an example of how that's benefiting just one participant within the global trade ecosystem, customs, it allows customs to make much more precise, much more effective targeting decisions. So they know exactly where did this container originate, who packed the container, what was the company that carried that container to the port, who touched it whilst it was in the port. And so based on that, they can be much more precise, much more nuanced, which reduces the physical inspection rate, which has obviously a commensurate benefit to the exporter as well as the importer, in that products are able to move into their target markets much more quickly and much more cost effectively. So they're the two areas of benefit that we've seen.
So with officials, businesses in terms of paperwork, but also officials. And let me turn to you on a slightly different piece of the overall tech puzzle. A lot of, in particular Asia, some of them barely use cash anymore. Whereas the Middle East is a very cash-focused part of the world. What's the shift, and what's the likely shift to digitalizing payments here? And is that an opportunity?
Yeah, it's a huge opportunity. I mean, with cash comes a whole raft of other considerations for businesses, particularly around the cost of managing cash, the risk in carrying cash. There's also, AML and KYC concerns that can be fundamentally addressed by moving payment flows away from cash-based forms of payment and into electronic payments. But I think this is very much a challenge in the consumer space, which has an impact on the business space because businesses are needing to deal with the customers that are making payments to them. When we look at the trade segment itself, then I guess cash still has an impact in terms of increased cost and the negative effects that has. What we've been focusing on ourselves is looking at problem statements within B2B payments, because although cash is certainly an issue in this region, there are still issues with other payment mechanisms that are predominantly used by trade. corresponding banking payments with the currencies in this region being pegged to the US dollar suffer from issues through the corresponding banking network. Again, KYC and AML and sanctions concerns create a lot of friction around that process. And I think the more that we drive all processes, not just payments themselves, but the type of elements that Anthony was just referring to further on during the process, the more data points that we're capturing, then the more of a dramatic effect you can have on the back end last mile payment as well, because of the quality of information that's available. And that can be for compliance reasons or regulatory reasons, as I've alluded to, but also just by capturing those data points and some of the points that you were discussing earlier on around machine learning and artificial intelligence can use to be actually drive automation within the payments, which is where the real benefits and savings will start to come in the longer term.
Luan, you mentioned data and the collection of data, which is an advantage that China has, but certainly in business terms, the collection of these data points, as Andrew and Anthony were just saying, critically important to accelerating procedures and processes and saving costs. Is that what you're saying?
Yeah, of course, that's definitely. And also data, and typically, even like FinTech, right, payments, it's all like a gateway. So make everything digitalized, right? So like, everybody's in the movement has been actually digitalized. So probably your wife, and the machine or the Google map knows better than your wife where you've been, right? And actually the payment system has been also be true and also be actually really reliable. And then based on that one, so machine can actually really do something, really a lot of things beyond of it. So future on, the book says, it's all like, data, and then everybody is, digitalized and yeah.
But in China, is that, I mean, it's not a lot of cash and consumer space, huge amount of data, and making great advances in AI. But in that business space, especially with SOEs, are businesses adopting some of this to improve their processes?
Yeah, of course. Digital marketing is one of the actually key applications in the field of artificial intelligence, right? So people really, everybody you're using your video stream. You probably starting it on like couple of hours. You might surprise why I'm actually using so many time, because machine or the app is feeding what you want, right? So every single minute, and you finish this one, is actually the other one pop up. Wow, this is actually more exciting. I'm gonna click again. So machine is actually learning your behaviors. Yeah. Even that's better than yourself about yourself.
So what are you seeing in terms of, I'll go back to blockchain, the adoption of blockchain? HSBC did a couple of deals, if I recall, last year that got quite a lot of publicity using blockchain for trade deals. Is that accelerating? Are you using it?
Yeah, no, I think the transaction we did is a public knowledge. We did a soybean transaction for one of our key clients out of Argentina. But we are now expanding, so it was a proof of concept but through a live transaction. But obviously now we probably very soon we'll be launching one in the Middle East, actually in the next couple of weeks, where we actually bringing more players into the transaction, because the problem with the trade transaction is there are so many counterparties involved on both sides of the transaction. Now bringing them all into a common platform is where the challenge is. There are so many digital islands nowadays. How do we bring in a consensus? Because digital distributed ledger technology is all about consensus. How do we bring them together is where the challenge is. So we're making the next level of progress in terms of bringing more counterparties into a transaction, and yeah, we are, and that's the holy grail of trade financing solution for us, and that's where we're moving towards.
Are you finding resistance or from those counterparties because they want to go their own path? Or is there a sort of general acceptance this is the way one has to go?
No, we don't see any challenges there. But what we see is probably lack of, probably an inertia in terms of moving into the technology, because a lot of large clients and even large banks, for example, are struggling with the legacy systems, and how do we actually integrate the newer platforms with the legacy systems, and how much investment you need to make. So there's a cultural change, there's an investment requirement, And then also the ability to bring all of them into a common objective is actually where the challenge is.
Anthony, the Chairman Chief Executive of DP World, our keynote speaker earlier, said that the cost of shipping a container is 20 to 30% is the actual container and the shipping, and the rest, ostensibly paperwork. Right. On that basis, if blockchain was rolled out on an industrial scale, you'd be seeing cost savings in terms of trade transactions of 70% by my rough calculations. Do you expect rapid adoption because they're so attractive, those cost savings?
Yeah, and I think it's been borne out by what we've observed over the last year, that the adoption has been very, very rapid. And part of the reason has been because it has enabled those participants in that network to remove paper. So there's a direct benefit, obviously, from removing paper, and there's an indirect benefit because if you look at some of these trade transactions, for example, the case of avocados leaving Kenya or to enter the EU, if any of this paperwork is misplaced or it's incorrect, that product sits there for a period of time and eventually gets spoiled. So there's an indirect benefit from removing some of the inefficiencies and some of the inaccuracies that exist in a paper-based solution. So I think absolutely it's one of the key benefits from adopting blockchain within the trade life cycle.
Andrew, what about smart contracts? Because we've spoken about them earlier, and in fact, last year I think you talked about contract disputes being solved by artificial intelligence in a blockchain transaction. Is that a key part of the digital revolution going forward?
Well, I think it's a natural part of the progress that Anthony has just described, and also Sunil alluded to earlier on. One of the fundamental benefits that the blockchain brings is the ability to bring in multiple parties into a single point of information gathering and sharing and signing of a transaction, and that's going to bring a huge amount of benefits for all of those parties involved. I think the other thing that's really interesting as well is some of the movement towards using cryptocurrencies or financial transactions that are run on top of the blockchain that can potentially be included within smart contracts, so that at the point of contract execution, funding is cleared via cryptocurrency as well. Now, none of the cryptocurrencies that are available in the market are mature enough or stable enough to be able to facilitate that in a really meaningful way at the moment. But the time will come when that isn't the case, and there are lots of projects, very spectacular and well-known ones like Bitcoin and other smaller ones that are much more valid, that are coming through the process now of development, that will come and bring in this element of financial settlement as the last mile on top of a smart contract as time moves on.
That's interesting because the cryptocurrencies have lost some of their luster. They were, in fact, public front page news for a while. Everyone was getting into cryptocurrencies, and of course the wild volatility in the value of cryptocurrency. But you still see that as being part of the digital revolution.
Yeah, absolutely. Yeah? I mean, there are fundamental problems in the, no offence to the bankers in the room, but in the financial services industry that need to be fixed. And cross-border payments is one of the largest opportunities for cost reduction and process efficiency. Particularly when you think about this not just in a financial sense, but also in a regulatory sense as well. I think I was reading in your brochure earlier on that when you start thinking about supply chain finance, 25% of transactions for SMEs are rejected and are not possible to finance because of AML concerns. And the more you start to use data to understand who the parties are that are trading and how they're trading, then you can start to eradicate all of those issues. And that's where cost really starts to come in. Ask HSBC how many people they're employing in compliance, for example. Yeah. What cost that brings into transactions.
Yeah, no, I mean, you talked about the SMEs and how there's a concern around banks not doing SME trade finance or supply chain finance because of KYC concern. But there are platforms that has now evolved. Say, for example, TradeShift. Now, HSBC works with a platform called TradeShift, which is onboarded close to 1.5 million suppliers on it. So and now we are embarking on a different project in Hong Kong, which helps SMEs get the trade financing opportunity, same as a large bank. So there are, like His Excellency said, necessity is the mother of invention, and where there is a gap, there are FinTechs, and everyone comes in to fill that gap. And the way we do it at HSBC is to obviously work with the fintechs. I mean, we are not competing, we're collaborating with them to see where there is a gap and where we can actually address that gap. Because we do have an objective around meeting the requirements of the community and the society as well. So we do that.
Very happy to take your questions and comments. So please, if you wish to ask a question, put your hand in the air. We'll bring around a mic and ask for just a name and organisation that you represent. So please get ready. But I'll come to you, Luan, Tian, first. You're looking at AI, but what's the next big thing in technology? As the director of global incubation, in a way, you're looking ahead. And one of the issues with tech is it's moving so rapidly. How do you grab the next big thing? So what do you see as the next big thing in the tech space?
Well, I'm talking about China, right? So actually, of course, the last page was like mobile internet, and artificial intelligence is actually beyond on top of that one. But once we talk about even artificial intelligence, it's actually driving down to each specific industries. So it's actually going to change each industries, and that takes time. And then so far we see that digital marketing, and which is really good ongoing. But next one, typically in the field of artificial intelligence could be probably automatic driving. We see quite many the science park or public transportation has been actually using the automatic driving already in China, and then just based on the regulations. But actually, one time I talked to even founder of unicorns of automatic driving company founders. They say, well, technology is also almost ready, and it's actually make everything efficient going to be in China. I mean, probably within that was actually last year, so it's going to be probably 1 year, 2 year more maximum for even commercial use. So just waiting for the regulations and everything, and that's going to be change a lot of things. So the technology is changing the business model and lives a lot, right? Yeah. Each single of them. So we see it's new wave of the business model based on the technologies, and then just open your imagination. So nobody can really actually focus the real going to be exactly happens. And then of course VR, we've been actually, people say 2016 is starting year of VR, but actually still 5G is not that ready. So VR is still based on the local stuff. But once 5G is ready, so the VR going to be actually really active. So that means going to be actually linked to every single person's life, and then a lot of applications going to be creating and feeding to the the platform. Either going to be education or webinars, a lot of things. So yeah.
We were talking earlier, Anthony, about 3D printing, and also it ties in with the increase in trade and services. Just elaborate a little on the example you were giving about where 3D printing and blockchain is actually potentially transforming not only trade but an industry.
So what we're seeing in some industries is that 3D printed, or what they call additive manufacturing technologies, have developed to the point that they can print components for example, aircraft or components for vehicles on site. So whereas before they would have had to rely on a complex global supply chain to get that part to where it needed to be in order to be deployed into that machinery, they're now technologies that are able to 3D print it. Now, the challenge, so that's the 3D printing part of the equation. The challenge that you run into is how do you manage that supply chain of data all the way from the engineers in the laboratory or the company that's manufacturing that product all the way down to the field where it needs to be printed. So that's where blockchain comes into play, in being able to manage that kind of provenance of the intellectual property, the provenance of the ingredients that go into manufacturing that part. So that's that's not a long-term scenario. That's something that is very near term. In terms of things that are more over the horizon, I think the advent of quantum computing, which is a new form of computing technology, is something that is going to have an exponential impact on many industries. Quantum is a new technology, a new form of computing that's allowing us to solve problems that were previously intractable using conventional computing architectures. So we're starting to see, for example, that quantum could be used to invent new materials that didn't exist before. new pharmaceuticals, new forms of treatment for different illnesses. So I think quantum is one technology that's going to have an exponential impact across many, many industries.
Okay, happy to take your questions. Who would like to join in with the discussion? No, all too complicated. Stephen, please. Microphone on its way.
It seems to me that one possible medium-term consequence of all of this is one which is not good news for developing economies. In many countries, including China, the first rung of development was cheap labor and basic manufacturing for exports to developed country markets. If you have a combination of extremely sophisticated robotics and 3D printing and quantum computing, it gets less and less obvious why a business in a mature economy has any need to outsource to a much poorer economy in the way that was done in the 70s, 80s, 90s, and the noughties. So I'd be interested in your comments on some of the strategic issues for middle income and indeed lower income, perhaps particularly for lower income countries over the next 10, 20 years.
So now let's start with you with that one.
Yeah, no, I mean, one of the trends, I mean, apart from the growth in services that we spoke about, is the labor cost arbitrage model is actually shrinking. We clearly see that the companies, and especially with all this protectionism and the trade wars, et cetera, it's actually kind of expedited that move. Now clients are no more looking at a labor cost arbitrage moving to lower cost country, and now they want a stable supply chain. They want access to the clients. Another trend is obviously the global movement of goods is reducing, whilst the regional movement of goods is increasing. So people are spreading their supply chain across the world and not just focusing on just one country. So that is one key trend. Mm-hmm. The other one is there are quite a few challenges even in the developed markets. I mean, in terms of adapting to these technologies. One is there are no regulations on data or cloud. The passporting rules is another one. There's a huge labor labor market disruption that's going to happen in the next 5-10 years. And the initial estimate is almost 50 to 60% of the labor in the next 10 years or 15 years are not equipped to handle the new jobs that's being created. So now, so there's a huge disruption that's coming. There's a big onus on the governments to actually now reskill the whole labor force. So there's a lot of challenges before we actually see these technologies taking over the traditional form of trade.
Yeah, Anthony, is that your reading of it as well?
Yeah, and I think the challenges also exist with respect to the so-called developed world as well. Like if you look in some economies, a significant proportion of the labor is focused on driving vehicles, whether it's taxis, trucks, or whatever, but they're driving machinery. Now that is an area that will be disrupted with the advent of autonomous vehicles. So what happens to those people? So this is by no means a problem that is, or a challenge that is solely the concern of the so-called developing world. I think there will be disruption across the board as a result of these technical shifts.
But will mid to low income countries have the greatest impact? Will the greatest impact be on them because they're probably more vulnerable to these changes?
So countries that have been heavily reliant on labor arbitrage as their core business model or value proposition to the world, they will definitely have challenges unless they can somehow upskill that population so that they can be valuable in a world that will increasingly be less reliant on certain classes of labor.
Okay, just finally to all of you, I want to get a sense of where the UAE, the Middle East more broadly, sits in terms of technical innovation, because most major cities, especially in the fintech space, are now positioning themselves as tech hubs, some more successfully than others. And Andrew, I'd like to start with you. Is this region behind the rest of the world, or much of the rest of the world, in terms of technological innovation?
Well, I think it depends. Technology is a very broad subject, right? So, but I think my area of expertise in fintech is, and my experience is that this I guess this region is slower than markets like Europe and the US.
Yeah.
Europe in particular has kind of led FinTech as a global revolution. I think, you know, China, when we're looking east, what those guys are doing now with new technology to power, particularly payments, is astonishing. I think what's happening now, though, is the Middle East is catching up very, very quickly. I can talk about Bahrain and the initiative that we've been working on in Bahrain, which is a public-private partnership to create a FinTech incubator and accelerant program in Bahrain FinTech Bay, and it's been very successful. You know, one of the benefits that, or a couple of the benefits that Bahrain have around that region is the fact that it's a smaller country, so it's easier to mobilize. We have the benefit of a purely onshore regulatory environment as well, which makes a difference, whereas here in the UAE you have a kind of split regulatory environment with an onshore regulator and 2 offshore regulators. So I think in many ways, you know, Bahrain has picked up the pace quite quickly. But it's something that we see across the whole region, and I think if we're not there yet, then we are going to be catching up with Europe very, very quickly.
Okay, so a bit behind some of the world. Obviously, China at the very forefront, but what about Hong Kong? What about Singapore? The UK, positioning itself as a FinTech hub. What's your reading of it from Beijing? Where are the big FinTech hubs? Where should businesses be looking?
Well, from like, you know, maybe Far East countries would be the mainland of China would be Shanghai. And Hangzhou also pretty good because Alibaba, Alipay.
Yeah.
And then Hong Kong, Singapore is also good. Nowadays, actually, it's not really people saying that's like going to be just hub, the hub of something. It's all combinations, you know. And so also the chairman question, you know, like, you know, developing countries, etc. Now it's everything just combined together. It's like an, you know, ecosystem, or you can call it. Or that's why usually I'm not using even the word of trade. So it's not really our word is not really simple as before. Just, you know, trade. So you A to B. You know, A is selling something to B, and either we're going to be actually party A, party B, or we're going to compete. So now it's really combined together. So like the U.S. President Donald Trump also trying to grab, you know, the label and the job, you know, back to U.S., right? So you can also see, like, you know, chopstick, you know, wood chopstick, you know, manufacturing in U.S. But also you probably see also in China has like an also supply chain as well. You know, people saying that like manufacturers and everything is moving actually from China, but actually some part of it still maintain as where we stay. Like, you know, even like a lighter, you know, the lighter. The China is the country that can make your lighter is like a one probably 10 cents, you know, for each lighter. How you can make it? How you can make it? I give you 10 cents. Can you make it a lighter? It's a lighter business in certain, like, you know, village or town. They distribute to, like, you know, 27 manufacturers. And they were assembling it together as a whole industrial line. So it's pretty hard to actually move from the other one to the other countries. And plus, you know, the technology of China also developing. It's all combining together. So that's actually how it goes.
Okay. Anthony, this region versus Singapore, Hong Kong, China, US, UK?
So I think within the blockchain context, I think this region is definitely leading the world. Yeah. And the evidence of that is we're increasingly seeing other countries that one would have imagined as being perhaps leaders in this space, coming here to study what's being done and what the thinking is here. And I think the reason for that is that if I look at most countries, technology shifts have been driven by the private sector, and then the public sector's kind of dragged along, but it's very much the private sector that's driving the technology agenda. Whereas here, it's the public sector. So the public sector has set, you know, a number of these north stars around AI, around blockchain, et cetera, and the government's driving it. And as a result of that pace and focus from the government, the private sector is then being brought along with them. So I think that is probably, if I was to say, what is the reason why the GCC is doing so well, relatively speaking, it's because of the government support.
Government support behind it. Final question to you, Sunil. What are your messages to business, to your clients in this world, you know, a huge disruption of technology? Embrace it, especially those with legacy systems, including, you know, existing banks. How do they grapple with the change in technology?
I mean, as of now, it's it's mixed, I would say. So there are companies at the forefront of driving this change. I mean, like you said, a lot of the change is coming top down. There's a government conviction, the strong conviction in driving the change. You have a Ministry of Blockchain and the Ministry of Artificial Intelligence, the Smart Dubai initiative. So a lot of this is coming down through to the corporates, and that's driving the change much faster. But there are also laggards in certain areas where they wait for their global counterparts to change before they move. So it's a mixed trend as of now. But we are seeing a lot of our clients are interested in actually talking about it. So which is the self-awareness is obviously the first step in any change, and that's happening as we speak.
Okay, so, thank you very much. I'm afraid we have to leave it there because we're way over time, and I want to move on to our third panel. But please, ladies and gentlemen, please thank my guests, Andrew Sims, Anthony Butler, Luan Tian, and Sunil Veetil.